So another red day for stocks today, guys, and for SoFi stock in particular, which I want to cover in this video, break down the charts, do the whole update. You guys know the drill. And I want to go over what I'm doing with my position, my plans here on getting more shares, which involve selling cash secured puts. We're going to break down the options chain in this video, go over my plan there. But first, hit the like button. Do not forget to subscribe, guys, and get your 30 stocks from Moomoo. Deposit at least $100. You get 5 stocks using that link down below. Deposit at least $2,000, you get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY, which, guys, it's a no-brainer. So use that link right down below or go to stocksurfest.com/Moomoo. And now, cheers, guys. Take a sip of your coffee, preferably a double espresso. Cheers. And now let's dive into it. So, guys, the red is continuing, right? Now SoFi is officially in the high 11s for the first time, and I don't even know how long, and we have every index down across the board. S&P's down, let's see, about 0.9%. Russell's down 1%. QQQ's also down about 1%, as the Dow's down 0.75%. The Dow is getting, hit as well, but not as much as the others, which is typically how it goes, right? And the VIX is up another 4%, right? Another 4%. Now the VIX is at 26 points, and we have SoFi down almost 4% now, getting hit again, man. And this thing, it seems like every day it's been taking out the lows from the previous day, and now we're down just on the 1 hour time frame here, just in the last, think about this, guys, 2 weeks alone, we're down from $17 to where we are now. So it's been abysmal for SoFi the last 2-3 weeks. It's down 30%. And to be honest, man, we're not seeing any signs of a reversal on the chart, but I am noticing a bullish divergence kind of in the making here on the 1 hour time frame, and on the 4 hour time frame kind of as well, a little bit. But man, it's just getting way oversold now, and it looks like we're at the same level we were at early November, end of October. So you guys know I was buying this stock at $6, $7, $8. I bought some over $10, right? So I've been buying for quite some time now. Not much in the last couple of months, to be honest, guys. But now that it's falling, I want to build my position a little bit bigger. And let's go over now to the options chain so I can show you guys kind of what I'm thinking about here. So, and by the way, selling options is the way to go, right? Selling cash secured puts, selling covered calls. That's the way to go for a more, statistically, successful trade, right? If you're buying options, they're more than likely going to expire worthless, right? So selling them, being on the other side of that trade, is, well, it's more likely that you're going to make money, right? So that's the idea in the stock market, guys. You got to make money, right? You want to make money. That's the goal. So selling cash secured puts, right? How does this work? Kind of why do people do this? Well, they do it on stocks. First of all, they want to own for the long term. Stocks that they believe in. You don't sell a cash secured put on a company you don't want to own. Or maybe you can. I guess you can do whatever you want. I mean, it's your money. But for example, SoFi is at $12 right now, right? So how a cash secured put works here is, let's say you have 10 grand lying around in your brokerage account, or 5 grand. You can use that cash kind of as collateral in a way here and make money off of selling cash secured puts, and you actually collect the premium, right? That's how you make money initially when you sell cash secured puts, right? And again, the cash is the collateral here. And let's say, for example, the stock goes down to whatever strike price you pick. And the way it works here, guys, is you pick a strike price under where the stock is, or a strike price where you want to buy the stock, where you would buy it anyway. So in this case, I want to buy SoFi. Let's use round numbers, for example, here at $10, right? So these are the options that expire on the 11th of April, so in 35 days. So, okay, in 35 days, if I think SoFi, or even if I don't think SoFi is going to go to $10, let's say I want to own SoFi at $10, we can pick whatever expiration date, whatever, and we can be like, okay, I want to own it at $10. I'd buy it there anyway. I might as well use the cash in my brokerage account to kind of use it as collateral to collect premium in the meantime, while the stock figures itself out, right? And if it goes to 10, you keep the premium, right? And you buy the stock automatically, at that or by the expiration. So, for example, here, SoFi, let's do the $10. Let's say we're going to sell, and I don't use Robinhood. I just use it here for the videos, guys, for simplicity. So we're looking at the $10 puts right now, right? SoFi $10 puts 4-11. Let's say I want to sell. Let's say I have $10,000 in cash, right? I can do 10 contracts. Let me pop in 10 contracts. So do you guys see this right here? Let me zoom in a little bit on Robinhood here. So 10 contracts, right? You guys see that. The limit price is 34 cents. So you multiply that by 1,000, whatever the heck the math is here, right? And the estimated credit is $340. Do you guys see that right here? So if you have 10 grand, right, you can sell cash secured puts on SoFi. And once you click this button here, guys, this gets deposited right into your account. The $330, you keep that premium instantly, right? And guess what? If SoFi does not go to $10 in the next month, in the next 35 days, if it does not go to $10, you don't buy the shares, right? And you keep the premium. So essentially, you're using your cash as collateral to collect premium while the stock is downtrending and kind of getting to that price where you want to buy it. And it's a win-win, right? You collect the premium. Even if you don't buy the stock at the strike, you have the premium, right? And if it gets to the strike, you buy the stock where you would have bought it anyway, and then you keep the premium, right? So this right here shows you the max profit, right, is $330. That's the premium. The max loss is obviously $9,600. That's if SoFi goes to zero after, you have to buy the shares at 10,000, right? So if it went to zero, you'd lose all your money. That makes sense there. So that's kind of how this works. And that's kind of how I am looking to get more SoFi shares in the meantime. Sure, I could buy them at $10 if it gets there, but I might as well collect the premium with the cash in my brokerage account while I wait. Does that make sense, guys? I know a lot of you are probably like, oh, I know this already, Stas. But for the, newer traders out there, that's kind of what I'm thinking, right? And let's say you want to go even further out. Let's say July 18th or something. Let's see what these are looking like. So let's say if we want to sell the $10 puts on, that expire on July 18th, you're going to make even more money. Let's say if you have 10 G's in cash, let's say you do 10 contracts, you're going to get $949. That's the estimated credit, right? You guys see that right here. That gets put right into your account. And again, if it gets to $10, you got to buy the stock, right? And the risk here is, maybe it collapses under $10, right, before the expiration date. And then you have to buy it at $10, even though the stock's at like $8 or something, if it were to collapse all the way down there. But yeah, that's kind of like a little crash course on selling, cash secured puts And it's pretty simple, right? If you have cash laying around, you want to own a stock for the long term, you might as well do it. Why not? If you know you want to own a stock at a specific price, it's it's smart. It's smart. It's what people do to collect or create more income in the stock market, And with covered calls, you have to own 100 shares of a stock. So it's not like how much cash you have in your brokerage, right? For collateral, it's the amount of shares. So you can't sell covered calls on a stock unless you have at least 100 shares of it. So that's a quick little rundown on that. And for me, guys, I'm kind of eyeing up. Or I might just do this every month, I'm looking at the 1 month out, April 11th, $10, strike there to sell some puts. And then if those don't hit, I'll do another month out, and, continue to collect the premium. That is the goal here, man. So what do you think? What do you think about that? Let me know your thoughts in the comments. As always, and like I said, guys, options are risky. Buying options are risky, but selling them, of course, there's still risk with anything you're doing in the options market, stocks, whatever it may be. But selling options, way less risky, and you can actually make some good money, good premium if you just continuously do it, And I like selling options way more than dividends, sure, dividends are easier. You don't do anything. Literally, you buy the stock, the dividend comes in. But you can make way more money by selling options than the dividend. It's a no-brainer. At least in my eyes. So what do you guys think? Let me know your thoughts in the comments. Run the likes up. Don't forget to subscribe. Join the free email list. That is down below, guys. And get your 30 stocks. Snag up your 30 stocks from Moomoo. Deposit at least $100. You get 5 stocks. Deposit at least $2,000. You get 25 more stocks. And your uninvested cash now will earn up to 8.1%. APY. Check out the link down below again, or go to StockSurfS.com/Moomoo. And with that being said, guys, cheers. I'll catch you in the next video.